Morning, everyone. I hope you are well. It's Monday. It's the 1st of September. It's a new month. It's the final month of the third quarter. It's the first month, if you like, of the final 4 months of the year. Quite a key time of the year. There's a lot of echo in here today for some reason. Hope you like my new background. Let's just have a quick shifty here. There we are. Oh no. Let's put it up there. You see it a bit bigger. There we are. Wash my hair. I've had a shave this morning. It's very early. It's 7:30, but we're going to trade into the open this morning. The chart on the screen. Excuse me. The chart on the screen there is the DAX, the 5 minute DAX chart. Let's make me a wee bit smaller. You can see what we're talking about. So this is the DAX. Looking, the big blue line here is the 24,000 level. We've been as high as 24,025 high. Our pre-market low was down here at 23,925 as well, or 927. There's Friday's high, 24,062. There's Friday, and the weekly low are 23,877. So 5 minute charts looking quite strong into the open. We could obviously have a breach of the 24,000 level. This strategy would have been short into here, closed it here, on long there for about 15 minutes, stopped out here for a losing trade. Gone short, reversed immediately. So the current open position here on the 5 minute on the DAX into the open would be long from here at 23,6. 23,964. Our stop loss will be down here, the low of the day, 23,927 to the downside. Guys, if there's anything you want to see or hear, let me know. The audio sounds a bit echoey this morning. If somebody could comment on that, I'd appreciate it. It might be just my early morning voice. So we're in the money. Are we going to reject 24,000? Are we going to go and test the pre-market high at 24,025? We shall see. So that's the DAX. Elsewhere in Europe, obviously it's the European Open, and we'll have a look at the FTSE as well. The Euro Stoxx 500, similar setup. Hello, similar setup. Except it's not refreshing. What's happened there? Euro. There we go. The joys of trading live. It's dropped out. See if the FTSE is any better. It's okay. Sort of marked this up yesterday. So that's our Friday's low, and last week on August high here on the Euro Stoxx. So we had a down week, basically, is what that's telling us. There's the daily chart on the Euro Stoxx. This was Monday, where we closed on Friday at 5,486. And we've been down all week, and our low for the week was actually posted on Friday, but we closed above that, so suggesting we're still weak. Obviously, on the daily, this would have been short here from Tuesday. The gap on the close on Monday and closing under the 20 period moving average, so that remains short. Our stop loss here, if you're trading this on the daily, would be round about here, the 20-day moving average, but that remains short. The FTSE had a similar pattern. We closed weak on Friday. The Nasdaq was down 1.15% on Friday. The Dow was performed the best of the big three, down 0.2 of 1%, and the S&P was down 41.6 points at 460, down 0.64 of 1%. So that's the Euro Stoxx. And the other major index opening in the next 20 minutes is the FTSE here in Europe. Where's the FTSE gone? That is my UK. Sorry, that is the FTSE. I thought that was the Euro Stoxx. That's the Euro Stoxx, similar pattern. There's my FTSE. Oh, it just looks exactly the same, doesn't it? I haven't actually marked this one up from yesterday, but we breached 9,300 the week before last, and we posted an all-time high at 9,300, over 9,350. But then last week, you can see here, Monday, Tuesday, Wednesday, Thursday, all the way down into the 20-day moving average. That's providing our support here on the daily time frame, and we bounced a bit on this morning in pre-market trading. So we were down 4 days of the 5 last week, having hit a new all-time high on Monday. but we're still holding the key 9,000 level and even the 9,100 level. Remember the last time we looked at this FTSE, we were talking about the 9,100 level providing support, and indeed it has. So that's quite a strong support area here through those first 2 weeks of August. And then we rallied off, new all time high here on lower volumes. Obviously, as we came into the Friday ahead of the long weekend in the UK, then we were down. Actually, it's got no trading there, has it? That's Friday and that's Tuesday, so it's not got any. It's not got um, Monday's trade because the market was closed. So we bounced off the 20-day. Okay. So elsewhere, let's have a quick look. And we'll go back to the DAX in a minute, see how we're doing. There we are. You can see we've breached the 24,000. So we're in the money on that long trade. Metals, gold remains strong, but we've come down quite significantly. Um, 3,400. Sorry, I haven't come down at all. What we're talking about. We've continued to rally high. This is our stop loss. Well, it's our stop loss from our opening trade last Friday, the 22nd. So I'm going to be ramping that up later on today. That's where we closed out on Friday at 3,445, I think it was, wasn't it? It's our current stop loss. Let me check that. 3,429 is where the stop loss is currently placed, but that's going to move higher. 4-hour time frame. That's my preferred measure. So we're still strong. We're getting obviously we're overbought here on the RSI. MACD signal line is spreading. The gap between them is getting a bit wide. So it's looking a bit overbought. But I'm going to lock in some of Friday's profits and move it up to the 5-period EMA here on the 4-hour time frame. I mean, this is an end of day chart. Our first target was all the way down here, so we're very much in the money on the gold rally, and we're over the spike we got to here at 3,445 following Israel's attack on Iran on the 16th of June. So that's a significant rally last week through those highs. So gold remains bid, my friends. Fight it at your peril. The strong trend. See, and say that clearly because the price action is telling me that we've got to the upside. The red candles are quite negative here and small. Not a lot going on. Remember, I was moaning about not much of activity on gold. I wasn't really interested. Obviously, we had the this big candle on the 22nd last Friday, and off we went on the close of that Friday. And again, lots of people saying to me, "Well, it's still looking." Here it was on the daily time frame. Lots of people were saying to me, "Well, that's still looking very sideways." And yes, it was, except we'd had a strong uptick on the 20th on the Wednesday. This is obviously ahead of the bank holiday in the UK on the Friday, but we hadn't recouped that big down candle. But what we had done is taken out 50% of that big down candle on that close on Friday. So I was happy to take that. My system had triggered. We were over the 20-day moving average significantly, big bodied candle there. And off we went last week. There's no guarantee this was obviously going to happen. We could have stalled here, which we did on in midweek last week. But with Thursday, Friday was a real buy through, and off we went through this previous resistance, which is where our stop loss is now, from the 22nd and 23rd of July high there at 330, which is providing a bit of a resistance to this last leg up here. So moving higher, and I say I might even get my stop loss a bit tighter than that on that daily time frame. But we are bid on this first trading day of the month for gold. So just go back to the indices, and let's have a look at what we were talking about trading the DAX. There we are. That's last week's 4-hour trend line, which is on the high time. So the trend is down, guys. Don't get me wrong. The trend very much down here on the 4-hour. Sorry, that's the daily, not the 4-hour. But you get the point from this high of the 22nd. That was Monday's high. Friday's the FTSE, but it's all-time high. The DAX had been higher than that, but on the Friday, the 22nd, the DAX is all the way up there. So we've been coming down for the last 6 days into the key 24,000 round number. And the next test to the low side is last week's low, Friday's low, here at that 23,877, 23,877 is the next test. And as you can see, there's lots of fresh air below that if that gets breached. But at the moment, we bought it on Friday. We haven't got close to it yet today, and we're up testing back over the 24,000 level on the opening trades. There's absolutely no data today. The US is closed for Labor Day. It's a major holiday in the United States this long weekend. Canada is also closed, so all the North American markets are closed. So it'll be very obviously just the derivatives markets, over-the-counter markets are open. So the futures are closed, options are closed, and federal government's closed. But obviously, watch anything. Mr. Trump never stops, does he? President Trump never stops. And overnight, there's been some relative general positive-ish data out of China over the weekend as well. The manufacturing PMIs were sort of in line. The composite was a bit better than expected, the official one. And then the casing here, this is a private company that measure PM as well. They're nearly a whole tick higher or a whole foot, 1 whole point higher than they were last month. And they're back over 50. Remember, 50 is the pivot point between expansion and contraction. Say what you like about the Chinese data. Lots of people are still very, very skeptical about it. It is what it is. You know, yes, it will be manipulated to an extent, but still suggestions that we might need some more significant stimulus for the Chinese economy. This is still very, very moribund, and impacts of tariffs and all the rest of it playing out. This week, Xi is actually hosting Putin and Kim Jong Un from North Korea. So meeting of minds, one may suggest. We'll see. So I say very quiet today. We have got manufacturing PMIs out of the European zone, unemployment rate in an hour or so as well. But after that, as you can see here, there's nothing going on in the US because the US and Canada is closed. And Miss Lagarde with a speech scheduled later on. I'm not sure where she's speaking from actually. And Schnabel, vice chair of the vice president of the ECB as well. So quiet start as far as data is concerned to the new month, but obviously lots of changes goes on. Lots of portfolios are churned as we move into this time of the year. So let's go back to our opening trading time frame, our 5-minute time frame. See how we're doing. There we are. We got to our 24,000. If this trade had triggered here, I'd have had a target here. Certainly, I'd have taken some that, even with a spread 150 points off that as we got to 24,000. Clearly, that's what other traders have done. We're still ahead of we're still 10 minutes ahead of the cash session, so this could be a fake move, obviously ahead of the open. What I'd like to see is the pre-market high tested and broken to the upside with a big strong candle. We went through there with quite a big strong candle to 24,000, but this is only the 5-minute chart. So the immediate reaction was selling at that 24,000 level. There may be some sort of buys and sells located here. I'd certainly be looking to go long with this if it does break here. However, remember the higher time frames are still short. So if we go up the higher time frames, the time frame very much short from last week. As we said, we had a low here on the opening trades, early European trades on Friday. Plotted our low for the week. We then rallied, but we couldn't break over the 20 significantly. That looked like we were going higher, and we immediately sold off. Down again, didn't go as low as Friday's low. And so Friday here on the hourly chart, the lows were higher, but also the highs were lower. So we got this pincer movement on the hourly chart still into the weekend. And so that's going to break at some point. So if we break out of this pincer movement to the upside, we'd need to break the 50-hour moving average, which sits there at 24,010 on the hourly time frame, and the flattening 20-hour moving average sits at 23,970. So European traders at their desks now. The market obviously isn't open yet, or the cash market isn't open yet, but you can see a rally through the 24,000 possibly, but we'd need to break, as I say, another 10 points higher around the DAX for this to go higher this morning. No direction from the US this afternoon. Asian markets were relatively quiet. We're again with the a softer US close, particularly that sell-off on the Nasdaq. The 1.15% lost on the Nasdaq on Friday. So Asian markets are softer. And Nikkei here down during the afternoon session started quite weakly, and it's sorry, the morning session started quite weakly. We moved down significantly, and 41,775 is our low for the day. On the Nikkei, we're back to 42,200, so we recovered the 42,000 handle into the European Open, and see what happens there. But as you can see here on the hourly, it's still to the downside. The 4 hourly is a similar down move from that high on the 28th. And you see down consolidation, and we're back into this sort of support zone there. You can see this here. Did it? So 42,250, 42,250 key pivot area here on the 4 hour time for you Nikkei traders, but you remain short as we're under the 50 and the 20. We're still trending lower, and we're still under the 9 period. So that short here maybe looking to get closed out there. Now on the higher time, we go up to the daily time frame. Nikkei hit a new all-time high here with a tweezer top in the middle of August, and we've been drifting lower ever since. Banged into the 20-day moving average last week, 1, 2, 3 days, and then Friday we breached it into close following the week or weakness overnight in the US on Thursday, and then we went down again on Friday under the 20. So that's that would have triggered a lot of technical traders, lots and lots and lots of technical traders in Japan. Obviously, most of them, majority of them, trade the Ichimoku cloud system, and although there's not moving averages on the Ichimoku, their indicators very much parallel them. So this break of this key 20 period moving average would have been triggered on lots of technical trades. Bit of buying this morning, as we said, but it's a very weak candle, isn't it? Obviously, we're coming into the close of the Japanese session at the moment. So Europe's taking over. So our DAX trade, let's go back to where we would have been on this strategy. So 5 minute, we'd have probably been, I'd have closed out at least half, and then that would have closed me out because we come back under the mid moving average. Remember what the rules are. So from here, our second half's only made that little bit. So we got in at 23,965. We got all the way to 24,000. I might have let that run till it turned around, but say 24,005. We'd have got out, and then the other half would have closed out here. The other way I do it when I'm trading short is not to do 2 phases, especially here into the opener. So you probably closed the whole thing out. But let's have a look what the opening volatility brings us. Remember, we've got opening trades. We've got the Monday start of the week, but we've also got, just as importantly, probably more importantly, the start of the new month as well, 1st of September. So we'll have a look at the FTSE and the DAX in the next 5 minutes as the markets open. So we're not anywhere around that. Remember, with your standard account, guys, the 2 minute window before and after the high impact. Actually, this doesn't. Actually, I'm saying that this doesn't count. I clarified this with the directors last week. This isn't regarded as a high impact news event. So here you can see on the 2 minute, we'd have had a nice, safer rally and got out there. So here on the 2 minute, we were long, and now we're short into the open. Obviously, bear in mind, technically, with short, I wouldn't have taken that trade because of the opening. And let's make that smaller because of the volatility of the open. But and we've been long and then short, so we might wait for the noise to settle down. But that's a clear cross there on the MACD as well. In fact, that's a strong technical short there on that 2 minute time frame because we've got a breach of the 50 line on the RSI. We got the MACD and the signal line crossing. Can you see that, guys? That's a very, very significant technical cross. Too perfect to be true, I would argue, into the opening trades of the month. But anyway, that is that was short from 23,979 from there. And let's see where we go from there. So that would be a short one there. Let's make that a different colour. Let's make that. I don't know, you can see the yellow. Let's make it. See the purple. What was the purple? Let's make it another turquoisey colour. Let's make it turquoise. There we are. So we're short from 23.97 now. We probably want to be filled at that price, but going down into the close for 3 minutes ahead of the close. Let's briefly, and again, our stop loss would be just, I'd have it, I mean, technically it should be up there at the turn of the market. We could easily get that taken out in the volatility. So that's a danger of trading the open. So stop loss would be up there to turn in the market. That's the last big candle. So I'd probably have it there, 24.06. In fact, let's put that on just for good measure. And then the volume I would have traded would have been dependent on what that level is. What volume gives me a 1.5% loss if this target gets hit, and that's what you can do with your trade locker platform. You can work out the volume based on the size of your account, that you're not going to lose more than 1 and a bit percent, 2% maximum, if this trade gets out. So we're looking further downward action. Remember, 5 time frames are very much to the downside, but we've seen obviously some rallies to the 24,000 level, and we're getting a bit of buying here right ahead of the open. So just watch that. Again, I'd have probably pulled this down now. Started there. Pull this down now to lock in some profits. Well, not loss, minimise my losses. If this wasn't the open. So let's just leave that there because it could be quite a lot of volatility both ways, and that's what happened at the open before we find direction. Let's just quickly cross over to the forex market. Dollar remains pressured. The euro's trading at 117.25 this morning. We've been as high as 117.33. Euro. So euro here in the chart. This is closes here, wasn't it? No, that's it's Friday's afternoon. Closed at about 117. We're back over that this morning, and euro moving higher. Sterling also moving higher away from the key 135 level, 135.30. Testing a previous target level this morning, up there at 135.40 is the high. Canadian dollar, remember the Canadians and the Americans not at their desks today, 137.50. We've got back to for the dollar. So this low from this morning at 137.25 has been bought. And we've moved higher. Oh, sorry, that was on Friday, wasn't it? And then we ticked higher. But again, the trend remains to the downside, weaker dollar. Really across the board. Let's say, guys, any particular asset you're looking at? Gold, we're saying, has continued to rally on the weaker dollar. Doesn't help, obviously. And crypto, Bitcoin weakened again over the weekend, 108,000. This morning we've been as low as 107,200. This was Saturday's low, 107,400 as well. So what looked like support at 112 has just given way. So if we look at the daily time frame, that trend continues to weaken. So Friday's big sell-off bounced a wee bit over the weekend, but nothing to get us moving again. So the downtrend, which was initiated here on the 18th of August from the rejection a week earlier at the all-time high at 124,500 continues. Looked like we were moving higher here on that Friday, the 22nd, and then last week we've just unwound significantly, particularly again over the weekend on relatively low volumes of Saturday and Sunday movement. But look at the size of the candles again, very significant. We followed through on Monday, bounced Tuesday, Wednesday, consolidated Thursday, and then down again. So the trend is very much the downside. Where's the buy, as well as we've said before, the 105, 106 area, this now becomes key, and then that also brings in the big round number that is 100,000. I'll just make that a bit. Wait. bit smaller. As we said before, 100,000 target, but there's quite a strong support. Was at 112,000. That gave way quite quickly. Only tested back into once and then down again on Friday's major sell-off. 705,000, that 2,000 window here. You can see the fibs, and then this. Are we back? Hopefully we're back. I don't know. Can you see? But yeah, so Bitcoin to the downside. That was obviously of the open. So let's go back to our DAX position. Cancel. Oh dear. We're on trading the open has its challenges. Where are we? Where's the DAX gone? New platform, 24,000. So that looks like that's reversed on open. We were 2 minutes, weren't we? We were. There we are, as you might expect, to reverse and take that stop loss out. So we should have pulled it down. So that's a losing trade ahead of it. That's why I tend not to do it. It was too perfect, as I said. There we are. We've crossed again already on open. So we're back over 24,000. What we haven't done on open, that's the opening candle there. Just move that to 2. We haven't tested yet the pre session high. So we haven't got to the 22,000. 25, that would give me confidence to buy that. This is the immediate leg was up here. Got the 5-minute time frame. The immediate reaction was up on the open. So pre-market. What were these levels? Oh, I've got too many lines on here. That was a stop loss, wasn't it? Let's get rid of. That's confusing me. Sorry, I didn't mean to do that. I meant to do that one. And that one. Let's take those off. I've taken my pre-market high off as well now, haven't I? No, it hasn't. That's our pre-market high. So that's what we're looking for. And that's our. I think that's the 8 o'clock candle. So let's make that a bit thicker as well. So that's our opening 5-minute candle. Sold into rallying before pre-market here from 720, sold into the open, and then bought, and then we'll see where we go from here. What's happening here? So is this rally going to continue? The pre-market high wasn't tested on the immediate open, so again we could be looking for some more weakness. But before we start selling this, we need to see these moving averages break to the downside and see some volume on there on the open. FTSE probably doing a similar pattern. There we are. Although this is, that was actually quite big, short, as you can see there, but didn't break that. It didn't actually trigger a short, and it's gone long on open. That's 2 minutes. Sorry. Oh, it's a bit. So yeah, still biased to the upside here from 7 o'clock, and might have just closed out on the hoo-ha of the opening trades around about the 29,020 level. It's come back at the moment, but still bids to the upside. So FTSE is long here on the 5-minute. A bit of differentiation with the DAX, which can't quite make its mind up. It's still sort of biased to the upside on the 5-minute time frame. But as you can see, the big round number 24,000 is coming into play, as it did in the Asian session here on the opening trades this morning, and before we plotted that high at 24,025. And it doesn't look like it wants to get there at the moment. There's no direction to take us there. So we could just be floundering for the rest of the day, given that there's no direction from United States, and there's no big data unless Schauble or Macron, not Macron, Schauble, and indeed Macron might have something to say, which Schnabel and Lagarde have something to say later on, because as we said, the calendar is virtually empty for the rest of the day, depending on these. Obviously, PMIs will have an impact. German PMIs coming in 50 minutes as well, so manufacturing still in the doldrums, but any positive data out of here will be taken with great glee from any of these European countries. So we'll have a look at what these look like in the next hour or so. So we could get some more direction there. And obviously, the unemployment rates at 9 o'clock is not expected to change from 6.2%. So waiting on the data now. We're still sort of biased to the. It's been a choppy one to trade there, as we saw. We'd have perhaps caught that as we started chatting this morning into 24,000, certainly taking at least half a positive trade. The second half would have closed as it's reversed here, back down here, so it would have been positive, but so that would have been fine before the market open. Losing connection, what's going on? Oh, dearie me. Nothing else running. Keeps chopping out. I'm going to wrap this up in a minute, guys, because it keeps dropping out, and I'm not sure it's the changes I've done with stuff here on the laptop. There's nothing else running, but we shall see what's going on. So there we go. Yeah, so weakening again, and perhaps into the data later on. So the key mover for the DAX, if you're still monitoring this, would be the German data in 45 minutes' time. But the first, the European data is coming at 1:15 here with the Spanish PMI data, which is being the strongest of the major EU manufacturers at 52.1. It's 51, nearly 52 last month. So still rest of Europe, including France, including Switzerland, obviously outside the EU, in negative territory when it comes to manufacturing, and the UK down at the bottom of that list at 47.3, just ahead of the Swiss and the French potentially. I know the French are doing okay. So yeah, not great data to be staring at. Tomorrow we got the US manufacturing PMIs. We'll be live for that tomorrow afternoon. In the morning we have in European inflation and the quarterly GDP numbers out of Brazil. Wednesday, remember, we've got this compressed week, so US is back tomorrow. Wednesday, we got the JOLTS numbers in the afternoon. I'll be live again for the opening trades in Europe on Wednesday. We've got the Casein services PMI. See it, remember, PMI services much more significant than manufacturing when it comes to GDP and the general health of the of these developed markets. So European ones and UK ones and US ones the following day. So JOLTS on Wednesday. Thursday, normal weekly claims, and we've got the services PMIs out of the United States as well, both from the Standard & Poor's and the more important ISM. They call it non-manufacturing PMIs, which is basically services PMIs. They also have a services PMIs, it's a bit confusing. For all you oil traders as well, we've got the oil inventories, which have been all over the place the last few weeks, up and down, some significant builds and drawdowns. Oil, let's have a look at the oil market this morning. We mentioned oil. So there we are, still buys to the upside a tad. So energies, yeah, we're having some problems with this new, didn't get any oil. Report that to the guys. No oils on my energies as well. We had a major technical upgrade over the weekend. So interesting that we've lost the oils. Cryptos looked a bit slow as well. Might be why we're dropping out. But let's just finish with the majors. So we shouldn't have had any major turn. No euro. Still bid to the upside. Sterling 135.27. That's ticked slow, isn't it, this morning? Actually, there's a bit of a sell there at 8 o'clock. But still holding the 50 there, but that won't be, that would have triggered short if you trade that on the open. side 135.40 support, 135.25, so 15 pip support. Just to have a look at our trades that were still open on Friday night. We were pound Aussie was a position that was open from a while ago, and we hang on a minute, has that been take out 4 hour, there we are. So that's reversed to our very tight stop loss this morning. So this is our entry. We were short this from again, was that that was Thursday. In fact, Thursday last week we were short, or Thursday the week before last week we've been short. This was short this a long time. We rammed our moved our stop loss down on Friday, and that's now been closed out for a very healthy, I can't do the maths there off the top of my head. We got in at 2.0826 and we've come out at 2.0682. So 180 points on that. So nice healthy start to the trading day. There we go, the trading week. So that big strong trend has reversed. We got our stop loss perhaps a bit too tight. It's under the 4 hour 20. I must have got a bit excited on Friday, but anyway, there we are. It's been now closed out completely. Pound Aussie closed for a very, very healthy profit. Gold, as I say, we are still long, and I'm going to move the as we stood here now. I'm stood here now. We're going to move this stop loss higher. So this is the 4 hourly chart. So we've moved very aggressively higher in the session. So I'll leave it around about there, just above that. So just under 4,450 at 4,000. What's that? 4,447 is our stop loss. I'll change that on the trading platform as well. But that's moving higher, and I might even ram that a bit higher. And we are looking at that all-time high. There we are, all-time high from April was in sight as we trade at 3,476 without the US session. So I might get proper aggressive with that actually, and push it there to the bottom of the last 4 hour. Could easily retrace that later today. So I'll update Discord. So pound Oz closed out for a healthy profit. Gold, if it gets closed out with a significant healthy profit, very, very strong move. Don't care why, I'm just in it. And I'm, these could be, these are big candles as well. Many would be adding at this position. Many would have added here as we've broken over this 3,400 level. You can see what's happening here this morning on Friday ahead of the month end, and then we've had this follow through. So we had a strong Friday, we're having a strong Monday for gold as well. So pushed higher, my friends. I'll update everybody later on. And the other two trades were the indexes, weren't they? I can't remember. We were long the Nasdaq. From yonks ago, weren't we? Why is it saying stop loss there? I'm a bit confused now. Did we not hit that? I can't have hit that. I'll have to check my notes, but that's reversed quite aggressive. I thought I would have pulled this down to end. Oh, perhaps not. Perhaps not. Oh, it's still open, and just there we are. Where it, why the stop loss is there on there? I'll check what did I say on the Discord group, guys. Bear with me a second. Did I not move the stop loss at all? Stop loss rate is 6,469. Is that right? Oh, I haven't got the Nasdaq. Oh, that's why it's the Dow and the S&P. That's what. Just ignore me. So right, sorry, it was the Dow and the S&P 500. Sorry, my memory's going. So yeah, the stop loss was moved here at 4.5. Yeah, that's right, isn't it? Yeah, that's right. Yeah, 646, and where's the Dow? 45284. Oh, is that not made in that's oh hang on, that's well. Did it not? That stop loss says 45284. Oh, there it is, 45284. So so it's out of the money, and the stop loss is there now for the Dow. And sorry about that. Check this at my trading plot. And the same thing here. The stop loss has been cranked up. It hasn't hit target. Target's up there. Still, again, I might just close it. It's certainly running out of steam. It's costing to keep it open on my other platform. S&P 500 and the Dow. Let me just get this all right again. Make sure I'm not talking. Except it was that one. Yes, at 30. There's the entry. There's the stop loss. There's the target up there. We haven't got anywhere near it since we got in on that last Friday. Stop loss was all the way down here. It looks like it's been stopped out there. It wasn't. That's been pulled up since then. So again, not much direction today. So again, I might just get out of that. However, having said that, for my own rules, it's the 20-day moving average that provided support still. So unless we breach that significantly with a big-bodied candle, which we're probably going to do now, I'll probably may keep that open for now. S&P 500 is a similar sort of pattern. No, it's already under. In fact, that's the 4-hour though. Now it's well above the 20-day, isn't it? Let's do the Dow. That's well above there. So it's the 4-hour that's been breached. 4 hours holding, and the S&P 500 has already breached the 4-hour, hasn't it, on Friday afternoon, and then again this morning. That's looking weak. I might close that one out as well. Anyway, I will update Discord appropriately. So anyway, where do we get to? Thursday. US services manufacturing PMIs, the weekly claims. ADP also on Wednesday. I mentioned Wednesday, did I? So let's choose Wednesday. Where's the ADP gone? Hey, there we are. ADP on Thursday because it's pushed ahead to Thursday from Wednesday because it's the holiday today. And then the daddy of them all, as many of you see it, some busy Friday morning. We've got retail sales and GDP out of retail sales and housing data from the UK and GDP for the EU, but everybody's looking forward to non-farm payroll. 74,000. The first reading I saw last week from the Reuters poll was 84,000, and the Bloomberg poll was 86,000. So this has been refreshed over the weekend down to 74,000. A few months ago that would cause mayhem. I don't think that's going to be the same unless it comes in, way, way lower or way, way higher. And certainly the unemployment rate's the one. The Fed is now very much focused on jobs from inflation, given the benign PCE reading we had last Friday. So there we go, my friends. Let's go back to the DAX, see if we've where are we now on our short-term trading. So the hourly, the 4-hour candles have bounced from Friday's low. That's Friday's low down here. The 1 hourly candle have been positive from that was the opening. I can't remember what that was now. Yeah, that was Friday's low. So it's been ticking up 5, 6, 7, and the 8 candles up and over its 20-hour moving average, but it's flat. Not a lot of action unless we break the 50-hour with some significant oomph, which we last did there on Thursday, but then came down and closed down for Thursday, down Friday. So the trend remains to the downside. Here on the 5-minute time frame, which we were trading in the open, let's just make this a bit bigger so you can see. It's been very messy. We took to 24,000, then we retraced, but into the 20, then we retraced, but then back there. So this remains, somewhat bid, but how much we're going to break away from the 24,000 is questionable. And we still haven't taken out that key resistance today, the 24,022, which is our pre-market high, which again, it was only, for a few minutes here. So the 5-minute candle bodies are where we are at 24,015. So that's really the resistance. And again, as you can see, it didn't last very long. So that's a bit of a resistance area here below 24,000 at 23,099.90. Okay, so bit biased to the upside, but watch the data coming in the next hour or so for Europe. Obviously, that impacts the DAX quite significantly, impacts Euro DAX more so. The FTSE was the other one we were looking at in the these opening trades. FTSE 9,207, similar pattern to the DAX, although a bit healthier here on the 5 minutes, still holding the 20 period as well. That keeps coming down quite aggressively there. That's the 8 o'clock. UHAR volatility took us to 9,225 before it's turned lower. But again, it's still holding its 20 period moving average here on the 5 minute time frame. Some 25 minutes into the cash session this new month, this new week. So 9,205 needs to break if we're going to take this short and then possibly into the 50 period. There's a bit of a gap on the open as well. But that was filled immediately to the downside. Then we bought it. So this holds. Looks like we could bounce back up here. For the FTSE, so let me leave you with my favorite chart at the moment, which is not the energies, because we haven't got any oil bosses. We haven't got any oil bosses. Go and get it. Go and trade locker up. But our gold trade remains nice and bid. Our stop loss. This is the 5 minute. Obviously, we rammed it up, didn't we? But what a rally this morning. So we've been as high as 3,490, basically 3,490, $10 shy of 3,500. We didn't get there last time. Remember, we were shy of it, only by 50 cents, but we were shy of it, so it's quite significant. And we're under our 20 period moving average on the 5 minute time frame for the first time now. Here at 7:55, ahead of the cash session open on since 2 o'clock this morning. So it's been a very strong, positive Asian session into the handing over to the European session. For gold traders, without direction from the US later on. So watch that. My stop loss might have got a bit too aggressive, but who cares? We're very much in the money on that. Okay, take care. I'll see you tomorrow for the manufacturing PMIs from the US. In the meantime, take care, be safe. And if you're not actually currently trading with us, why not, basically? We're very open. We're very clear. It is what you see. I'm real. I've been around a long time. My the colleagues that run the company have been around a long time. We are the grown-ups in the room, as we like to call ourselves. If you want a quick one-step express challenge, as we call it, before you get to your funded account, if you're new to us, new 25, we'll give you a huge 25% discount off what is already very, very well priced challenges with some very, very simple conditions. There's no you can't just have one big trade to win. There's no consistency rules. You can hold it over the weekend with the Express Challenge. You can trade the news, so you can trade seconds around the news if you want to, holding stuff over the weekends. You've got an 80% profit split, so you're successful in your first challenge. You make 12%, not losing more than 7%. Maximum daily loss is 4%. Obviously, you don't want to be losing those sort of levels anyway. We do have another rule about 3% on any one particular trade idea, but that's quite, again, it's the sort of thing you don't want to be doing anyway. You want to keep your losses 1.5%, 2% maximum to stay in this business long term, guys. I know a lot of traders. I've seen tens of thousands of accounts don't trade with a stop loss. They don't trade with a take profit. They don't have any understanding of risk management. They don't understand leverage, and they're just constantly blowing accounts, constantly buying accounts. $10,000 account for $85. If you have a 25 new to us, you get $20 off that, and it brings it under $64. But if you want to be serious, find $100, and you can get a $25,000 account, $131 with the 25% discount for new traders. So come and give it a go, guys. You've got $100 to lose basically, but you got if you're successful at this, the world really is your oyster, because you get paid every Friday you get your refunded payment due. So you buy an account, you get that back on the second time on your second funded account. It used to be the third. We've brought it back down to the second funded account. So and obviously any profits you make, 80% of any profits you make, excuse me, are yours. Okay, take care. I'll see you tomorrow. Be good, be safe, and may the pips be with you, my friends. All the best. Bye bye. Ahmad's asking any coupon code for existing users. Ahmad, try TL20. I think it's TL25, is it? Let me just check. Oh, Discord 20. There we are. Try Discord 20. Can you see that? Let me just copy that. So we've got a second account, Ahmad. Apply. There we are. 20% is the code. So Discord 20 gets you 20% off, Ahmad. Okay. Hope you all, my friend. All the best. Take care. See you soon. And actually, let me just leave you with a gold chart now. It's coming down in the last 10 minutes. So we're very much in the money. Okay. See you tomorrow. All the best, everyone. Bye-bye. No problems, Ahmed. Thanks for being here, my friend. Interesting. No, you got all the best, my friend. Hope it works. Take care. If not, get on the Discord group here, and somebody will answer you. Johnson's. There we go. Per trade. Okay. See you soon.